Hello, chart watchers, and welcome to this Friday, September 7th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, kind of flipped the market action today. The Dow Jones Industrial Average lagging a bit, down 31. The S&P 500 up fractionally, still at about that 2878 area. The NASDAQ, though, after starting off weak, has come back and actually leading to the upside of 20 points this morning. The Russell 2000 bouncing off the 20-day moving average. Nice reversal off the earlier low, currently up 4 points. 10-year Treasury yield moving much higher after the jobs report. We'll talk about that in a bit. Volatility after moving up into the 15s has reversed and is down slightly at about that 14.5 area where you can see we have had much resistance over the past couple of months. To the upside leading, we've got some aggressive areas, which, again, has been kind of flipped from what we've seen the past couple of days. But today we've got consumer discretionary reversing off of earlier lows and leading the market to the upside. Technology doing the same thing. Utilities, which have been leading the last couple of days as money moved toward more defensive areas, actually lagging today, down almost 1%. Home builders down again. It seems like it's been a while. Toll Brothers came out with that big earnings report about 3 weeks ago, and home builders were doing really well. But I think with that strong non-farm payrolls report this morning, folks looking forward to perhaps another interest rate hike, and that is not helping home builders today. Two earnings reports that came out overnight looking very strong. Both of them came in better than expected. We've got Broadcom. You can see up $16 today. So that is up roughly about 8% on the day. And then OKTA, Okta Inc., another software company that just blew it out of the water park, whatever, today. Big move up on OKTA. Was at $60 yesterday. Now it's $72.50, up about 20% on the session after a great earnings report. Okay, Erin, end of another week. Big jobs report came out today, mostly better than expected. How's your Friday going?
Oh, Friday is starting off pretty good. Nice weather on tap, and my husband will be back from his fishing trip. So that's always good to look forward to, just in time for date night.
Oh, there you go. You got any big plans for the weekend? Football?
You know what? We actually are going to a fundraiser. For those of you who don't know, September is Childhood Cancer Awareness Month. And my daughter is a survivor, 11 years now.
That's awesome.
And yeah, so I'm going to a fundraiser for one of her friends who sadly became an angel when she was in treatment. But we're having a big fundraiser for our children's hospital on Saturday night. So I'm looking forward to that.
Excellent cause.
Mm-hmm. Well, September, it's the month. Go gold.
There you go. Okay, well, we got a action-packed Friday in store for everyone. So, Erin, what do we got up today?
All right. Well, you just revealed this morning that you will be doing a trading strategies using strong earnings chart list workshop coming up on Tuesday of next week. We have Brian Livingston coming in on Wednesday, and then Grayson Rose from right here at StockCharts will be with us on Thursday of next week. Should be a lot of good information. Today, we're going to start off after our technical news with technical scans, and then we're going to move on into Turning Point, followed by the 10 and 10 to 1. Ultra Clean Holdings will be our first symbol, and the sentiment update proves to be very interesting at the end of the show. So you'll want to stick around to see what sentiment is showing us right now for next week. Very interesting stuff. But let's go ahead and get started with the technical news and headlines.
Sounds good. Okay, first up, always like to start with the 10-year Treasury yield. You can see the huge move today being made by the Treasury yield. Of course, that means money is rotating out of Treasury. So money is rotating out of the defensive Treasury market. We saw earlier money rotating out of utilities, which is defensive. And as a result, we're seeing money rotate into some of the more aggressive areas. We did have the August non-farm payrolls out earlier this morning. They came in a bit above expectations, 201,000 versus 195. The private payrolls came in even better, 204,000 versus 190,000. The August unemployment rate was unchanged from from July, 3.9% in August, same as July. but the market actually was looking for a dip down to 3.8%. So it did come in slightly above expectations. August average hourly earnings rose 0.4% versus 0.3% of 1% that was expected. So I would say everything pretty much in this report would point to that 25 basis point increase when the Fed meets later in September. I think that meeting is coming up in about 2 weeks or so. So I think that was widely expected that the Fed would raise another quarter point at the end of the month. And based on everything I saw with the non-farm payrolls report this morning, I would expect that is going to be the case. So with this move up in the 10-year Treasury yield, of course, one area that I always like to watch, I like to see what's going on with the banks with a rising Treasury. And you can see a little interesting that the banks are not responding to this push to the upside. Another group that tends to go hand in hand with Treasury yields is life insurance. And again, same thing, not really a great response. I expect that we're going to see the Treasury yields continue to move up. And I think both of these groups, both banks and life insurance, will make a push. And in the case of life insurance, go back up and make a push for that 800, trying to get through that 800 level. I see an uptrend. I see equal highs. I see higher lows. I think as long as life insurance holds this 780 area, we are in an ascending triangle pattern, which I would expect to break to the upside. And I don't see anything coming out of the economic reports or anything from the Fed that would suggest that we're not going to see a rate increase, which eventually I think will lead to money rotating into life insurance. So those are a couple things to keep in mind. Also, home builders, I mentioned at the top of the show, not doing very well today. And of course, I think with the prospect of higher Treasury yields, higher interest rates, home construction, as you might expect, taking a little bit of a dip. And I mentioned here was the day that Toll Brothers came out with their very strong earnings. We got to push up, but notice we still have this downtrend in play. We haven't been able to clear prior highs, and yet we keep going back down and threatening these lows at 750. I think it's going to break. And when I look at a weekly chart, I have hope for home construction, but not yet. We've talked before about this 20-week moving average. That Toll Brothers report that came out, remember, we were threatening to break through that 20-week moving average intra-week, but we failed at the end of the week like we have on so many occasions during this downtrend and throughout much of 2018. I think we lose 750, but I think we're getting close to a pretty significant bottom. The PPO, as you can see over here, is rounding, starting to try to turn higher. I think if we get one more push to the downside, the major move that we saw at the end of 2017 into 2018 began after we had 2 months of consolidation and a base set at about 720, 725. I think we're going to go down to that level. And once we get there, I'll be looking for a reversing candle and then ultimately a break back up above that 20-week moving average. Still a lot to go through. I'm not ready to pull the trigger and jump into home construction, but I do think that this is something to watch. We had a huge move on home construction, and usually when you get those big moves, it takes a period of time to consolidate. I'm going to go ahead and show you the monthly view. Take a look at this huge run that we had up here, and we've come back down essentially just to test that rising 20-month moving average. So I still think this group overall is in an uptrend, even though it's been a very weak 2018. Home builders and renewable energy were the two best performing groups in 2017. Our memories tend to be pretty short, and we see home builders pulling back and underperforming throughout this year. Just keep it in mind and keep in context that move that we saw at the end of 2017. This is a huge, huge move. And so we've simply gone back down and kind of tested that area of the breakout, or maybe on the verge of testing it. So I'm still a fan of the home builders. Okay, in this morning's blog, I want to show you something because I'm very bullish. And I wrote in my blog today one of the reasons why. And for me, I believe we're in a secular bull market. Now, I almost always talk about the short term, but I still look at the long term for a big picture view. This is 75-year monthly chart. This is about as far as I'm going to go back. I'm not going to go back past the 1920s or 1930s. But here you can go all the way back, and you can see that when the market runs, this is the S&P 500. When the market runs, it really doesn't pause a whole lot. But then it'll go through these periods where we'll move into more of a secular bear, which we saw in the late 60s and throughout all the 1970s. And then once we finally made a breakout above this range, we took off and really didn't look back. We had periods of weakness. I don't want to suggest that we're not going to see any weakness and no sell-offs, but you can see that 4 or 5 years into the breakout of that sideways consolidation pattern, we still had many, many years to go, another 15 years to be exact, before we reached a very significant high back in 2000. Then after going sideways, look at the pattern. I mean, the pattern almost looks identical to what we saw in this 12-year pattern back in the late 60s and throughout the 70s. Well, this was from 2000 to 2012, essentially that same 12-year pattern. And then we break out. I think we're starting what we've done in the past historically. I think this is a long-term secular bull market that we're in, where we will see pullbacks from time to time, maybe even a cyclical bear market, but I think the overall uptrend will remain in play for many years. Just my opinion. You feel free to disagree, no problem, but I did want to point that out. Now, I wanted to go into the sector summary. I wanted to point something out, because if there's one negative in the market right now, you might look at this and say, well, if you take a look at the performance of the sectors over the last 3 months, look at what's going on. Utilities, healthcare, consumer staples are leading, easily leading over the aggressive groups. Well, anytime the market's breaking out and you're being led by defensive stocks, we should be a little bit cautious, right? I mean, I think so anyway. But I want to point out a couple things here that you need to keep in mind as well. And that is, I'm going to go into the seasonality. Let's pull up the XLU. And in this case, I'm going to take a look at the XLU relative to technology. So let's pull this up, and then let's scroll back the last 2 decades. And what you're going to find is that when you get into the months of June, July, August, and September, the utilities tend to outperform technology. This is going across, adding these up. Over the last 20 years, utilities have averaged outperforming technology during June, July, August, and September by about 1.7%. But look what happens when we get into October. Look at the underperformance that begins, meaning that technology takes over leadership in October, and it really runs through January. Those 4 months, there's tremendous outperformance by technology. Let's go a step further here, and let's take a look at the XLP versus the XLY. And again, let's drag this back over the last 2 decades. And again, what you see is that when you get into the summer months, June, July, August, September, look at the outperformance of the defensive consumer staples. You get into October, November, December, January, February, March, April, those 7 months, consumer discretionary has outperformed consumer staples each of those months if you go back over the last 20 years. So what we've been seeing the last 3 months, while it's maybe a little bit unnerving, it also is kind of normal from a historical perspective. We tend to see defensive groups lead over the summer. The market tends to struggle over the summer, and anytime you have a struggling market, you're going to see rotation into defensive areas. It's just what happens. So I would be careful about drawing too many conclusions about what's happened here over the past 3 months. A couple of the earnings reports that came out, I mentioned AVGO, which is Broadcom, trying to make a breakout. We'll see if we can make this breakout, but this has been a stock that has underperformed for a while. So we're getting a nice bounce from the earnings, but let's see if we can hold it. And then the other one was OKTA, just an absolutely awesome report. We've seen so many software companies come out with reports like OKTA. Big gap up, huge volume. This one is clearly going to be on my strong earnings chart list going forward. And I'll talk about that in just a little bit. But first, we do have some upgrades and downgrades. So Erin, what are you seeing with those?
Right. Well, I ended up picking out, there were quite a few actually today, but I went ahead and picked out 4 upgrades that I thought were interesting and downgrade. Let's go ahead and we'll start with that downgrade. Goldman Sachs downgraded CVE, Synovus Energy. Get that to come up there. There we are. From a neutral to a sell. Clearly, you know, it's on its way down. It looks like it may have found a little bit of support here back from December, but I would not look for it to hold that. Look at the PMO. It's already been in decline this whole time with price confirming that. Even when we did get that rally, the PMO couldn't even get into positive territory. So this one looks like it's been sort of a dog for a while, and I suspect it will continue for a little bit longer. I wouldn't be looking at this one necessarily as a bottom fishing candidate. All right, some upgrades for us. AK Steel, B of A upgraded it from a neutral to a buy. I found it pretty interesting because it's really just been in a trading range between about $4.20 and $5. And, you know, lately, as of the last month, it's only been, you know, traveling in a trading range that's even thinner than that. I mean, I think the good news here is that it is at the bottom of that range, and it's been in it for quite a while. So on the upside, I think you could still probably get to the top of this range anyhow, even though you're sitting now on a bottom. Now, granted, my PMO just went into a sell signal, and I have to say I don't like the look of the OBV. But this one I think might be worth a spot on the watch list. And honestly, when I looked at it, I thought it could have been a candidate for turning point, but I did not include it because I'm doing it right now. All right, Broadcom also came in with an upgrade today from B of A from a neutral to a buy. You can see, obviously, we've got the nice breakout. The place of overhead resistance is the top of this gap, where it gapped way down back in mid-July. And it is trying to make its way back up. The PMO looks rather healthy, as does the OBV and Scooter. But, you know, we're on an almost 7% rise right now. So maybe if you get a pullback with this new upgrade, you know, we might be looking at a good buy to get to the top of that gap. So I thought that one was rather interesting. Cabot Oil and Gas also upgraded today from a perform to an outperform. And you can see it is actually sitting right there on some very important support. You know, I'm not so sure why we ended up with the upgrade, given what's been going on with this stock for so long. And I know, I suspect if I put on the Tom's relative chart, we'd probably find that this one isn't doing as well in an area of the market that has been doing fairly well lately. So I'm not on board for this upgrade myself, but certainly something you could think about. I mean, look at this 20, 50-day EMA negative crossover below the 200-day EMA. That's a full-on trend model sell signal. So I just don't see it as a great candidate here, despite the upgrade. And the final one that I got was Vail. I know we get this one a lot as a request, so I thought I would cover this one. Jefferies upgraded it from a hold to a buy. You can see it is bouncing off of that 200-day EMA area of support. But it's already getting ready to hit and looks like it's had a little difficulty getting past that 20-day EMA. Looks like it might be crowding it in between the two, the 50 and the 200-day EMAs. I'd be looking for a breakout there, but honestly, again, you're looking at a stock that has been in a trading zone for quite some time. You know, it's about, what, a third up from the zone. So I suppose if you wanted to try and make a play on this, you could. We could be seeing a little bit of a double bottom forming here off of this big decline, but not the best candidate. I didn't think it looked that great. So anyway, that's it that I had for the upgrades and downgrades. And I know that a lot of people ask us where we get them. I look in a couple of different places, and I know that you do too, Tom, but briefing.com is one, and I think I have MarketWatch, not Watchers, MarketWatch as one of my go-tos to find these upgrades and downgrades. So anyway, that's it. And I guess let's go ahead and we can move on into our first segment, which I believe is
Technical scans.
Technical scans. All right. So I was trying to figure out what I wanted to do for this particular segment, and I decided that I wanted to do it somewhat on the fly, which is always a test of everything. But I'm going to bring you first here to our member dashboard. You know, I do have quite a few scans, and I'm going to actually be using one of my scans for our next segment. So I'm going to hold back on that. But what I wanted to show you was how to use the predefined scans. I think these are underutilized, and they do most of the work for you. And if you are a little bit more intermediate in your experience level with using scans, you can, you know, make them more, you can modify them to make sense with the way you're looking for things. But you go in here and we have bullish indicator scans and bearish indicator scans. You can look at candlestick patterns if that's your thing. And then there's even the point and figure patterns. So what I like to do, there's a few in here that I don't know, I find some great candidates using it. It's not my typical types of scans, but I think it was Grayson was on the show and talking about the parabolic SAR buy signal scan. And I've actually had some pretty good luck with finding some very interesting stocks using this particular scan. So I'm going to go ahead and pick it up right now. And right now there's 190 in there. Well, obviously we don't have time to look at 190 stocks. I don't have time for that, and you don't have time for that. So I'm going to go over here, as you saw, and I'm going to edit it and make it, I'm going to narrow it down by putting in the kinds of things that I like to see and use on my own scans. So I'm going to actually bring us back here. I need to get another window open so I can have my regular scans in here to look at. And I'm going to take my general PMO scan because it has pretty much all the general things I like to look for. And let's go ahead and we'll just start right here. I know that I want to use this to narrow down that 190 stocks that are in there. I want to get just the US ones. I want some with decent volume, and I prefer to have a stock that is generally above the $10 range. It's just a preference there. So we're going to go back here to that parabolic SAR scan. And again, it's already in there for you. And I'm just going to click down and add that. Now, one thing it's going to tell me, and I can tell you right now, that the syntax isn't going to be right. Because I put this, which is the beginning of my normal scan, in there, and there's no and in front of that because we've already got the type and everything up here, but that's okay. I can repeat that, but I need to put an and in there so that it can read, the scan engine can read it. All right, so let's see what happened just by adding those two conditions. And we've now made it down to 65. Okay, that's still too many for me. I want to narrow it down a bit more. Let's go ahead and let's find some. Let's look for the ones that have had a PMO rising for the last 2 to 3 days here. So I'm going to just copy that from my other one. And I'm going to, add that in here. And I had commented out these two. When you put those slash marks in front of that line, it takes it out of the equation. So I'm going to add it back in. I may take them out if I don't get the right results, and we'll see. So let's run the scan now. What do we have? 0 results. Okay, so see, I obviously narrowed it down just a bit too much there. So I'm going to go ahead and do like I was showing you. You can comment out some of these lines. So we'll do that right here. And now I'll run it. And now I have 13. Woo, okay, that works. So I'm going to take it, and I have my scan dump where I put stuff. So I'm going to do that real quick here. And then we'll look at a few of these just to see what they ended up coming up with. All right. And I'm going to start it right off with candle glance because that's what I like to do. If you would want to have your own candle glance style, because you know I've got the PMO on here and my 20, 50, and 200-day EMAs. If you want to do the same, just go to your charting workbench, save the style that you would like to see in candle glance, you know, set up the chart with all the things you want in it, and then save that chart style and name it candle glance. And that's going to bring up this every time you pull up your candle glance. And for me, this is just absolutely the best tool that I use on stock charts. in conjunction with scans because I just have so many results and I need to be able to look at them quickly. All right, so what looks interesting on this? Okay, well, I can see, I don't like this. I could just see all of those EMAs going the wrong direction. Yes, the PMO looks like it might want to turn up. Well, it tried to do that over here too, and it just continued. So I can tell I don't want to look at that one. This looks interesting. You can see that we've stuck ourselves here on support, and the PMO is turning up. Granted, we have the negative configuration of those EMAs, but it looks like we're finding a stopping point here. So let's take a look at this one a little more closely. This is one of those juiced ETFs. It looks like the Brazil Bull 3x share. So you know, be aware jumping into something like that right away. But you know, really interesting setup here because I do have that bottom coming in a very important area. And the PMO is turning up, so I do like that, but I'm going to look at this on a little bit larger scale. All right, so we are in the middle of, you know, not really a basing pattern, but we are near the bottom of the range that we've been looking at recently for this. Okay, I think that this is a possible, as a bottom fish sort of opportunity, but honestly, I think that I would avoid it just because of that, you know, that it is that juiced type of stock. So let's find something that we like better than that. This one looks interesting. All right, again, a nice little rounded bottom here that's starting to turn back up. You've got all the EMAs going the right direction. And now you've got a PMO that has paused, but it does look like it's on its way up. Look at that OBV, really nice. Move to the upside, even though price was mainly moving sideways and a little bit up. So I like that look. It's already up almost 2 3/4%, but you can see it has kind of pulled back down to that area that was previous resistance. So this is, I think, a rather interesting run, PBR. And I feel like I have looked at this one already this week. It just must have come up on some other scans as well. All right, let's take another peek at a few others here that might be interesting. Let's see, AT&T. All right, we've got the 20 is now turned up above the 50-day EMA. We've got a little bit of a gap here, and the PMO is turning up above the 0 line, so that looks pretty good. If I were to annotate, which I will do very quickly, and then I'm going to give Tom the floor. Look at the area of what was resistance. We had these moves to the upside, but this has posed some resistance, and we've gotten back above that. And I'm looking at the gap from back here that still needs to be filled, so we could see a move to that area. But we also have overhead resistance just here at that August high. Still would be a really nice move, and I think you could set up your stop rather tight here on this one. So I think AT&T actually looks interesting here, coming up on that parabolic SAR scan. Look at the scooter starting to make some improvement. Probably would like to see a little bit better looking OBV, but you can see we've had volume to the upside here after all that distribution there. So could be some interesting movement going on here on AT&T. So those were the ones that I had, and kind of the way I do some of my technical scanning if I'm going kind of off the path of where I normally go. That's one of the ways I will do it. What kind of scans do you have for us? Oh, I can't hear you.
First, I'm going to start off with Vitamin Shop, which is VSI. I'll go over a scan here in just a minute, but the first thing I wanted to just show you so that you can kind of get an idea of why I run scans the way I do. You can see that VSI made a huge move up, very nice volume back in June. And when it pulled back here, this was the bottom. You got a reversing candle right there. That's a piercing candle, which is a good sign of a reversal. And then right down here, you can see the RSI had just briefly dipped below 50. And throughout this uptrend, when you go back and you can see that most of these bottoms coincided with an RSI that was between 40 and 50. So when I run scans, a lot of times on my strong earnings chart list, which typically have uptrending stocks in them, I'm looking for RSIs between 40 and 50. And if you notice, VSI is coming down. The RSI right now is at 50, and it will soon be giving me that signal. So that was just one. And I'll show you the scan in just a minute, but I want to show you another stock. And this is one I just traded, literally just sold it this morning. And this was on Sierra Wireless. And Sierra Wireless, when you take a look at it, here was the RSI dip just recently down into the 40s. It had gapped up, taking out this prior sideways consolidation. So in my view, it was a change in character. And if you annotate this after the huge gap up, take a look at the price support level right here, just above $18. So it went all the way back up to 20, meandered sideways. And then when it came back down and it hit that 18 level or close to it, look at the RSI down there at around, in the 40s. So this is why I like to try to look for RSI 40 to 50 readings within my strong earnings chart list, because I think it presents, I'm not just going to buy because the RSI is between 40 and 50, but a lot of times it will provide me stocks to take a look at, and I might like the stocks from a price support perspective. Now, a third stock, and this is a different way that I'll look at stocks from time to time, but CTRL, Control 4, was another one that I just recently traded. I got out of this one this morning as well, as it was hitting overhead resistance. But the pullback here came down to almost the same level of this breakout, the short-term breakout. I was looking for support between about 33 and maybe 32.5. And when it came back down and hit this level, notice the RSI was above 50, so it wouldn't come up on my RSI scan. But I'll show you another thing I do with my strong earnings chart list in just a second to uncover stocks that are hitting support before they get to that RSI 40 to 50, because not all stocks will go into that range. But you can see it pulled back and moved up, and this one may continue moving higher. It's kind of done what I expected it to do. It made a nice bounce off of its support area, went up, tested gap resistance, and that was good enough for me. So I'm just taking it. You can see volume today is just kind of average at best when you look at it relative to what's been going on. Nothing guaranteeing the stock wouldn't just come back down to the 20-day moving average, so I don't want to hang in there and hold it for too long. But let's take a look at this RSI scan for just a minute. We'll go back and I'll do it from over, no, let me stick with this. Let's pull up the scan down below here. So I've got a scan that is RSI 40 to 50 strong earnings, but I don't know on this particular account. No, that's not what I wanted to do. I don't know if on this particular account no, I didn't change it. Let me just change it real quick here in the group. You can go down. You can run scans against any chart list that you have. So here's a chart list, my strong earnings. I don't really even care about this volume. If they're on my strong earnings chart list, then I'm fine with the volume and the liquidity on the stock. So let's update this criteria, and let me just run this scan. So this is going to highlight every stock on my strong earnings chart list that has an RSI between 40 and 50. So this kind of essentially guarantees that I'm going to find stocks that I am very interested in, or potentially very interested in. Now, one of the stocks on this list I can tell you I just bought, and this is On Deck Capital, ONDK. And what I like is we gapped up on very heavy volume in August, pulled back, and we hit that gap support area right around $8. So to me, I'm waiting for a pop here. If this thing gets back up to, I don't know, close to 9, I'd be out of it. But I can manage my risk if I'm getting in down close to support. I'm not guaranteeing I'm going to go higher. Big difference. Then let's take a look also. If I go back to this list, let's see, there were others on here. Hertz Global, this one I own, HTZ. Here was the move down. This one actually did have the RSI down in the 40s, as you can see, when it hit gap support. So this is the timing. Now I'm kind of kicking myself because I went up to the 20-day, could have taken a really quick profit, didn't, and now I'm holding, and I'm back in the middle of the range. But you can see how that bounce happened here. There were a couple of others. Let's see. I'll do one more of these. The three I was going to show you, and you can go back and look at them later, SSYS, WGO, and AIZ. But I really liked earlier what was going on with SSYS. So let's take a look. Well, it's come back down quite a bit. It had a really nice candle off of this move down to test this gap support area. And if you look, where's the RSI? Down in the 40s. So I don't like to chase when these stocks are too high. Instead, try to get them on a pullback. The other thing that I do is I could go into my strong earnings chart list. And if I hit this view all button, and by the way, I do like to still use my sunset, so just ignore that for now. But here on the chart list, if you go into the summary, you can quickly get the listing of stocks. And I've got them listed in terms at the top here in terms of the worst performers today. And I'm actually looking very closely at ATKR. I haven't bought, but you can see the pullback. Look at this coming right back down near these support levels. Volume starting to pick up a little bit today, but this has been a really big drop on light volume for the most part. And look at the volume on the big move up through resistance. Very heavy volume. So this is one that's coming back. If I can get a maybe a reversing candle, actually, I think even the current price is not a bad level to think about taking a position. But these are the kinds of trades that I make. And I'm saying all this because this is a snapshot of what I'm going to talk about on Tuesday during the workshop. So if we can pull up a summary, we'll go over some of these charts that we just took a look at. Erin had a few that she went through, and then I did the same, had a bunch that I went through as well. So there's your listing of individual stocks that we took a look at. And now it is time to move on to Turning Point. And Erin, do you have some stocks that you like here making that turning point?
Of course I do. All right, let me go ahead and I'll get right to it. So as I said, I ended up doing a scan to find my turning point stocks. I really do. I use the scans all the time. And actually, I just got a suggestion in the chat room that maybe I do a workshop on, a step-by-step on manipulating predefined scans. So I might just do that as my next one. All right, so what I decided to do is I have a scan that basically is concentrating on stocks that have a 5-day EMA crossing over their 20-day EMA. I'm going to drag you down there. So here's that line right there. So I want one that is getting some really nice movement on a 5-day moving average, on an EMA move. So I'm looking for it to cross up over that 20, and that tells me that there might be some steam moving to the upside. But I also want it to be set up in a bull market configuration. I'm not looking for bottom fishing opportunities. I want something that's already, pretty much primed to do well because it's been in a bull market configuration, meaning 50-day EMA is higher than the 200-day EMA. And then I use my PMO crossovers. And of course, again, the way that I like to narrow it down as far as it being a US stock with a close above 10. And in this case, I'm going to allow for a little bit lower daily volume. So in this case, I ended up commenting out these last two because, again, I ended up with I didn't end up with the kind of results I wanted. So that's what I will do is if I just don't get that many results, which I'm just going to tell you right here, number one, if I'm running scans to make investments and my regular scans are not coming up with very many opportunities or not enough that I need to open up the amount of stocks that I'm looking at, if I have to start canceling out conditions in order to get a lot of stocks, that typically tells me that I probably want to not be investing right now. That I probably should sit back unless there's something really great. So I'm just caveating right now is that when I ran that last scan and now when I'm running this scan, I did have to comment out some of my PMO requirements. So right now, all I'm looking at is whether the PMO has not had a buy signal and that it is rising today. And that's it. So the bull market configuration and having that 5-day or the 5-day EMA crossover the 20-day EMA. So that's really what I'm looking for here. I ran that scan. And let's see. I put it in my Market Watchers live charts. And I came up with all of these. So we're going to take a quick peek at these. We'll just go down the line. Brown-Forman, this came up as a possible turning point. You can see that it already is starting to make a rally move, but it hasn't quite broken out over this area of overhead resistance, but it looks like it might be poised to. You have a PMO that's turned up over the 0 line, which is positive. And right now, since this morning, it has gotten that PMO buy signal. So I think that we might be looking at a turning point here for Brown-Forman. Another one I had is G3 Apparel Group. And again, you can see it's been in this moving sideways mostly. But, you know, I'm looking at this PMO now. Boy, it looked a lot better this morning, I can tell you that. It's flattened out. But again, we're looking at possibilities for a turning point and possible breakout from this trading range. And, you know, look at the OBV. We got such great volume yesterday. Of course, it pulled way back off of that high, which could be a problem. But I think this one has some interesting, again, I had to open up my scan to let a few in that I normally maybe wouldn't have normally looked at. So this one I think is interesting, but probably not, I wouldn't make any recommendations with that. HSIC, Henry Schein. This one I thought was interesting. You're getting kind of a very short-term flag. We managed to fill up that gap. It could now manage to hold support here at that 20-day EMA. And if it's a flag move and we get that breakout above 82, well, we should look for a move that's, looks like about $6 in length here. So, you know, move up to that 88 range, which I suspect is near overhead resistance right about here. There it is. Okay, the next one we have here is AG Mortgage Investment Trust, MITT. And again, you're seeing a lot of these are in trading ranges, but that 5-day EMA is crossing over above that 20-day, and that's giving you notice that in the short term there's some good momentum. There's a nice up thrust, and when I see the PMO starting to rise and come up for that buy signal, this might be giving you that opportunity to get in early on something, whereas a lot of times when I wait for the PMO to have been rising for a longer time, I think that increases my probability of success. However, sometimes, you know, if the market's looking good and you're not having to do like I'm doing right now, is opening up conditions to get more stocks, then you might want to go and look for something that is, you know, maybe a little bit more hidden. And again, these I'm thinking are at turning points because those 5-day EMAs are coming up above the 20s. And right here, again, another trading range. Looks like it's trying to break out, and you have the PMO buy signal coming in on that. Otter, OTTR. And this one you can see is already broken out from that declining tops trend line. We've got a PMO that's turning up, and we could be making a run for that high that we had last month. And Pepsi was another. And this one's looking fairly good. I'm not as excited about it now that I see the PMO starting to turn back down. But again, if you draw the declining tops trend line, we did get above that yesterday. I'd be watching this for an inside bar. That could be an interesting setup there to the negative side. All right. Public Services Company, PNM, also came up on this scan. You can see we got that breakout above this very short-term trading range, and it's coming back down and testing the top of it. So we could be looking at a turning point here for another breakout to get us back up to that $41 level. I'd be watching that PMO. It did flatten out since this morning, so just something to be aware of. But those were the ones I had.
All right, let me take a look. First, I'm just going to go quickly how I picked the stocks for today. I was looking at the scooter reports, and I went into both the mid caps, so you can just adjust it here, mid caps and small caps. And what I looked for were stocks that had RSIs between about 75, or excuse me, scooters between about 75 and 80. And the reason I did that is that normally if a stock is pulling back, getting close to a support level, Many stocks are just making moves on that scooter up into the high, into the 80s and 90s. During a pullback, we'll come back and maybe test that 75, 80 area. Just something I've noticed over time. So I wanted to start out by taking a look. First one I pulled up was right here. You can see the scooter is just below 80, 79.6. And this was Nomad. I'm not going to go through the list of the scooters. I'll just pull up the stocks from here on out. Actually, I have a longer term I think an hourly, or excuse me, a annual chart. I thought I had, but I think it may have just overrode it. So let's go out and take a look at a little bit longer chart. But on Nomad, here's a stock that looks like it's making a turning point on the chart. That candle, that is a bullish engulfing candle right off of the 20-day. And also right off of price support. So this is the kind of move that I would be looking for as a trader, is once I have made a break above prior resistance, and you can see if you scroll down here, volume was pretty good on this breakout. I look for pullbacks to this breakout area as possibilities for entry into a stock. So I think NOMD is potentially making a turning point right here, and perhaps ready to make another push to the upside. Next up, and I'm going to try and go through some different areas. Nomad is in the consumer staples area. Next up, I'm going to take a look at ADVM, which is a biotech. It's a small biotech company. Keep in mind, these tend to be extremely volatile, but you can see the heavy volume that came in about a week ago and this big gap up. Well, we gapped up to 650, ran all the way up to about 775, and then over the course of the last 3 or 4 trading days, we've made a move all the way back down to test the top area of gap support. So this is when I like to see stocks reverse. So I'd be looking for a reversal here on ADVM somewhere near this 650 area. It may already be underway. Next up, from the energy space, DNOW. And you can see big gap up. Look at the volume here, taking out the prior high. So if I annotate this, you can see, yes, we have come back down beneath the top of gap. I'm going to show you a couple of different lines here. There's the top of gap support. Here was the selling after it gapped up. We did see some intraday selling down to about 15. And then we also had this prior high over here at about 1550. So you kind of have to make a stand and decide what kind of strategy you want to employ. But I would be looking for a turning point on DNOW somewhere in this 15 to 16 range. It is still selling off, but as it gets closer and closer to 15, I really like the reward to risk, and I'd be looking for a turn on the stock somewhere near that level if we get down that low. Let's take a look at Nano, N-A-N-O. This is a technology stock. This is in the semiconductor space. And, of course, semis haven't been doing very well, but this is a stock that has performed exceptionally well over the last 4 months. Look at all the volume coming in, big move to the upside. But as it pulls back, again, check out gap support and price support. First, we've got the top of gap support coming in at about 40. Actually, there's a candle body just below 40 right there. And then the low after this big volume gap up on August 1st was just above 38. So this is a zone where I would be looking for a turning point in NANO. And let's go ahead and do one more. And this would be, I'm going to pull up a discretionary stock. I haven't looked at one of those yet. Let's pull up Urban Outfitters, URBN. Urban came out with great earnings recently. It was in an uptrend. Look at it gap up. The stock was trading below 48. It gapped up over 50, ran intraday above 52 before reversing pretty solidly back to the downside. But it has now reached an area that I would expect to be some pretty significant support. So I'm going to shorten this so you can see the candles a little bit better here. But once we broke out above about $43, I think you're going to see some fairly good support coming in right about there. And then also recent lows. I mean, we've been holding in this 43 to 44 area over the past 3 or 4 months. And so after gapping up with really good earnings, I kind of remember Urban beating on top and bottom line, although I'd have to go back and double check that. The stock was trading up over $52 after earnings. And now, all of a sudden, just 2 weeks later, it's on sale, $43 to $44, and nearing some pretty key price support where it's turned in the past. So I would be looking for another type of turning point. You can see the last time we got down to this range, we had a bullish engulfing candle. Those are the types of things that I'd be looking for. Maybe a tail below 43 and then come back up, print a hammer, something like that. That would be a signal maybe of a turning point for URBN. So those are the stocks that I had for turning point. And we will bring up a summary showing you the stocks that we just covered.
There you go.
And it is now time for 10 and 10.
10 and 10. I've been writing down and looking up and getting all of these ready for you. So let me go ahead and share that. Okay, so this is what we have. And hang on. Get rid of that. All right, so that's what we have right now. I did use the weekly RRG. We've been moving it back and forth. And so I was looking for the ones that, of course, have that northeast direction. Those will get a little bit more credit to get into the 10 and 10. But also we look at what sectors we have and the various sectors and if there's something different or interesting in there. And then I also check to see if we've looked at it within the last week. If we've looked at it within the last 5 shows, then I'm not going to show it unless it's voted the most popular one in the chat room. So get your votes in and we'll see which one will be second, but we'll start off with Ultra Clean.
All right, let's start off with UCTT. This is a semiconductor stock. And remember, semiconductors really been struggling. You can see that here just in this last little bit of action that's taken place over the past few days. But take a look at UCTT's chart. I mean, we have been declining, and I kind of drew this, it's a declining tops trend line here that we did barely break above. We had some okay volume, a little bit better than average, I'd say, breaking above it, but quickly we went back down. This is why if I'm trading a downtrending stock and I'm playing a trend line breakout like this, I don't want to see it go back down and lose the 20-day moving average because look at the relative weakness of this stock relative to the semiconductors. We already know semiconductors are struggling. And now you've got one of the weakest stocks in that space. The last thing you want to see is a false breakout where the stock turns back down again. So I don't like UCTT. I think it's underperforming both its peers, the S&P, and now its peers are underperforming the S&P 500. So I don't see anything really to like about this one at this point. So I'd pass.
Okay. And the most popular right now in the chat room is Alibaba.
All right, Baba. Oh, well, you can see a breakdown over the last 6 months. So let's stretch it out to a year. See if that helps us. Maybe find a different support area. Well, not really. I mean, this is pretty good volume coming in and breaking down below 165. And many tech stocks, especially stocks in the internet space, have really struggled of late. And you can see there is that support level. And you can see a clear breakdown. And not only do we get a breakdown on increasing volume, but so far we've gone back and tested that level and it's failed. So this is not looking good to me. I would be really careful right now with Alibaba. I would pass again.
Okay. The next one I'm going to give to you is going to be PPA. That's one we have not looked at.
Yeah, I'm not familiar with this one. Invesco Aerospace and Defense ETF. Well, I do like the fact that we've broken out above the high that we saw in April. I also like the fact that we are continuing to hold the rising 20-day moving average. So this is the breakout that I was talking about right there. You can clearly see tops almost to that level back in January, February, and then clear a big top there with a huge red candle at $59 back in April. Came all the way back up, end of July, early August, tested again, and then we broke above. Looked like maybe it was a false breakout, but I always give it down to the 20-day moving average. You can see that has been holding, and we continue to move up. I think this looks like a good area. I actually think the industrials are starting to show some strength. So I'm good with PPA. I think this is a, if you want to diversify into aerospace and defense, and I don't know the breakdown of all the stocks in this particular ETF, but just on the surface, looking at the stocks and knowing what I know about in industrials, I would be okay with this one.
All right. Let's see. How about we look at Our only consumer staples request Keurig Dr. Pepper, KDP.
Okay, well, huge move up in July. We've been pulling back. I'd have to wait for this trend or this channel to break. And actually, let me get out of here and let's do a shorter term. Be easier to draw this channel. Let's just do the last 4 months or so. No, we'll do 6 months. All right. Clearly, to me, it appears that we are in a channel. And so until we break out of that channel, I would be cautious. And the channel, if you just connect these highs, something like that. And if you grab this line, hit the command left clicker, you can kind of draw this channel in like that. So I think eventually this is going to pop again back to the upside. But as it consolidates, I'm not interested. This is just wasting my time and capital until I can get a momentum break to the upside. So I'm just in watch mode right now. I'm not bearish, but I'm not going to jump in before I see a breakout. I want to see something that I can trade from a momentum perspective.
All right. Okay, the next one is somewhere I need to go today. Costco.
Yeah, I love Costco. Costco's ranks up there almost near Starbucks for me in terms of just favorite places to go. Love the breakout. It's overbought. I mean, I'm not going to have any negatives really. Let's pull this one up on the relative chart so you can get a good idea, a good sense of what's taking place here. But Costco's taken off. You can see that the broadline retailers, this has been one of the strongest areas of the market. Costco, believe it or not, even with a chart that looks like this, is not exactly one of the better relative performers. So it's a great stock, but it's also in a great space. And there are many others in this space that actually have outperformed Costco. But I still like the company. From a long-term perspective, I would be a fan. I think from a more, looking at relative strength and trying to figure out, okay, which broadline retailers do I want to own? I'd really like to see Costco break to the upside out of this relative consolidation pattern that it's been in here just recently. It's sitting almost in the middle of it. But if we could break back up above 0.125, I think not only would we have absolute strength, but then we would see more than its fair share rotating into Costco. So that's something I would look for. But looking at the chart from an absolute perspective, it's overbought, but that's really the only negative here.
All right. Next one has been requested a bit, and we haven't looked at it. In the biotech space, Kronos Group, CRON.
All right. Nice move up here recently, breaking out to new highs, whereas the biotechs have not. And just recently, you can see biotechs moving lower, while Kronos has jumped back up to the upside. So what that all means is that we've got a stock that is breaking out on a relative basis to its peers. Now, there's always more risk involved in getting into individual biotech companies, so definitely keep that in mind. And you can see how the relative strength jumps all over the place. That tells you that you've got a stock that's fairly volatile and risky. But I do like the stock breaking out above that prior high. Notice here, false breakout. We come back down. Where do we go to? The rising 20-day moving average. So I used to be somebody who would just quickly sell if price support didn't hold. And then I began realizing that many times these stocks would go below their price support, but they'd hold their rising 20-day, which is what you look for in an uptrending stock. And this is a perfect example of that here. So I like the stock. I think eventually this one goes higher, but just keep in mind that it is riskier than most because it is an individual biotech.
All right. This one looked really nice on the RRG, and that is Fastenal. FASD.
All right, pulling back. Be interesting to see if that was a negative divergence with these highs. Maybe we get a 50-day test. I think I'm okay here as long as we pull back and hold that recent low. So, and if we look across, you can see that the group has broken out. Fastenal, relative to its group, has not been, one of the best stocks. But relative to the S&P, it's doing okay because its group is performing very well relative to the S&P. So if I was in this one, I do think that there are others that would be better suited in terms of investment in this space. But I think we got an uptrend and a breakout. I would just be concerned maybe if we lost about $55 to the downside, this recent low. because I think we have a high established, a low, another high. So I wouldn't want to take out this low. That would also be losing both moving averages as well. So maybe a tepid buy signal here on FASD.
Tepid. Okay. How about Acacia Communications, ACIA, Telecom?
Yeah, look at the group breaking out and look where we are on ACIA. Now, we do see some strength, and I do like the fact that it's holding this price support area, the fact that it's holding its rising 20-day. I think there's some positives here. It has started to show a little bit of relative strength versus its group, but it's not one of the better performers. So I would be careful if it fails to hold support. So let's draw a couple lines in here. There's the key support. First of all, look at the gap up on heavy volume, sideways consolidation. We break out. That has been holding a support. A move back below 37 on ACIA would really be a negative for me. And ultimately, I'd be looking for a target, at least initially, up at 45. Okay.
Let's see. The next one and last one is Tesla.
All right. I'm only seeing 8 so far, but
I must have missed something.
All right, let's take a look at Tesla while you're checking that out. It's at a major support level. I mean, talk about a stock that has just been in free fall. 3 or 4 weeks ago, the stock was 380. Now it's 250. That's about 1/3 of its market cap lost in about 4 weeks. So I don't like trying to get in front of these freight trains when a stock like this is falling. All the autos have been falling. You got a lot of tariff talk out there. There's just not a whole lot going on. If there's one positive on Tesla's chart, is that it came down and tested a major support level going back to last year. But if you're looking for a bounce, that's all I'd be looking for is a bounce, because you don't have a strong group and you don't have a strong stock. So again, maybe we get a little bounce off of price support, but if I got it probably even back to gap resistance at 280, I'd probably be moving back to the sidelines.
All right. I found number 10. Now, you're saying I've only given you 8, but I'm just sure I've given you at least 9.
Well, Tesla was number 9.
Yes, good. Okay. I'm not losing my mind. It is Friday after all. Atlassian Corporation, Team, TEAM.
Another software stock. Yep. Another great looking software stock. There are many of these smaller software stocks that look really good, and this is one of them. Came down, tested the 20-day moving average, and bounced as I would have expected. But here's an example of a stock that's performing very well, and it's in a group that's been performing well, and it's broken out versus that group here over the last 6 weeks. So you've got one of the strongest performers in one of the strongest areas. So if I was annotating this and saving it, what I would do is simply draw some lines, and this is exactly how you want your stocks to look if you're trying to outperform the stock market. You can just draw these 5 blue lines, directional lines, and this is exactly how you outperform the market. If you get into stocks like this, I'm not saying you can't lose money, because obviously you can get character changes on the chart, but until those character changes take place, this is a great, these types of stocks are great places to have your money parked. So I like Team.
All right. Yeah, that is a beautiful chart there. All those upward sloping arrows.
Absolutely.
All right. Well, that concludes the 10 and 10. And here are the symbols that we did go over. I will get those up into the Market Watchers live chart list, and it should be available to you after the show shortly. All you have to do is go to the blogs tab on our homepage and then find the Market Watchers live blog. You'll find the link to this chart list at the top of the blog, and of course in every single Market Watchers recap that I write. So go ahead and check that out. But right now, it's time for our final market update. So let's see what has been going on in the market. All right. The markets have been rather jumpy today, kind of choppy trading. We did open down, made a move back up. The Dow almost got into positive territory there, but falling back down. Looks like we're coming off of some intraday lows right now for the S&P 500. NASDAQ has managed to stay most of the day in positive territory, and it currently is there right now, up 3 32 points there. OEX, we're seeing also bouncing off of that intraday low and heading up toward positive territory. Not sure if it's going to be able to complete that move. S&P 400, same. Russell 2000, small caps, also spent a lot of the day in positive territory, although currently they are down slightly. And TSX opened lower and has been moving mostly sideways since then. The TSX down 78.68. The Treasury yields are rising. We're now at 2.937%. UUP, big gap up and starting to make its move to the upside. Gold is moving lower, but it has not broken down below the lows that we saw on Wednesday. TLT, big gap down and moving sideways. I've been very bearish on bonds and I continue to be. USO is did open lower and is trying to take back about half of those losses, but currently down 0.8% for USO, reading at 1419. All right, Tom, what do you see in the markets right now? Was there something of interest you wanted to add to our market update?
Yeah, I wanted to just quickly go over, we talked earlier about the fact that we've seen some relative strength in certain areas of the market, especially on the defensive side. So I wanted to just quickly point out that if we look at a longer term chart here, you'll see that this is a chart showing the XLK versus the S&P 500 over the last 10 years. Then we've got the XLY versus the S&P, XLI versus the S&P, and then XLF. These are the four widely followed aggressive sectors. And these are the ones that, in my opinion, we want to make sure continue to perform okay on a relative basis. Doesn't mean that they all have to go up every day. But when you look at the technology, and I've talked a lot over the last couple of days about how weak technology's been and so forth, take a look at this relative chart, though, from a big picture perspective. Do you really see anything going on here at the end that's changing the character of the relative performance of technology? Because I certainly don't see anything. XLY breaking out on a relative basis. The XLI, yes, it's been weak. I think the tariff talks have certainly had a lot to do with that. I think the fact that interest rates have been moving lower or sideways for the past several months, I think that's having an impact not only on the industrials but also on the financials. But there have been no relative breakdowns. And what I mean by that, even if you see that the XLI has been pulling back on a relative basis to versus the S&P 500, take a look at the area that the group broke out from right here. So this was the relative breakout back at the end of 2016. And look where we came down on that weakness. I look at this much like I look at an individual stock chart, where if you have relative resistance like we clearly had for 3 years, when you break above, that becomes relative support. And so here we come back down, we test that area. And so far, I think it's holding up just beautifully. If we look at the highs on the XLF, we're on a relative basis. Same thing. We pulled back in the second quarter of 2017, but we held that relative support. So even though we've been going mostly sideways, it's better than going down and losing relative support. So I think the four major groups here still look good, and I think bodes well for the stock market going into the fourth quarter. So that's all I wanted to point out, because I know sometimes we get so focused on the fact that, oh my gosh, semiconductors are down, internet's broken down, that we don't take a step back and look at the big picture. And here I think it shows things are still quite healthy.
Yeah, I think that's a really good point. I actually have added your relative charts as a chart style to to my workbench, just so I can give you some credit where credit is due, because I do find that really interesting to see.
Well, how I was just going to say I'm going to pass the credit on to John Murphy, because that's who I got it from.
Well, there you go. And that's how it works, isn't it? We pass that baton around.
Yep.
All right. It's time for some sentiment data, and it is very interesting today. So let's go ahead and get started on our sentiment update. All right. Okay, so here is my sentiment charts, and I'm going to start off, as I usually do, with the 10-day moving average of the put-call ratio. And what I want to make a note of, as I do, as before every sentiment report, and I do still get questions, so I think it's important to go over what we're looking at with sentiment. Sentiment is how market participants feel about the market based on their trading activity, and many times based simply on poll results. Like the poll that is in there that I encourage you to take right now on StockCharts TV. You should see under the polls tab our poll for you to tell me what you think about next week as far as the S&P 500. Will it end up closing higher, lower, or mostly unchanged? And I'll give you what my answer is at the end of the report, as will Tom, I'm sure. Okay, so when we're talking about sentiment, it's how investors and market participants feel about the market. Are they bullish or bearish? And the reason we want to keep track of that is because when the majority, or when there's just a huge amount of bulls, or in this case, if there are a huge amount of bulls, if the activity is very bullish, that's actually bearish for the market, because you're not going to see big time reversals until everybody is really on one side or the other. You don't generally see something happen from a neutral position. You see it from extremes. And so extremes in sentiment are contrarian. So if we see extreme bearishness from our market participants, then that is bullish for the market. So what are we seeing right now? On the put-call ratio, it's a little less intuitive, but this is the way that I put it, because it is a put-call ratio, not a call-put ratio. But the higher the readings are, that means that investors are very bearish, okay? And that's because you're seeing the put side of the equation, the numerator, getting larger and larger, which means that the number is going to get larger and larger. So that means investors are very bearish. And when investors are very bearish, that's bullish for the market. Well, what's going on right now? The exact opposite. We're on the low side, low readings. We've now had a bottom. And typically when you get these lows or these bottoms, that's when you're going to look for that reversal, because again, everybody's very bullish if your put-call ratio is very low and you hit a bottom. So that's when you should start looking for either some consolidation, maybe a downtrend. You can see we had one back here in 2017. So that's what we look for. And right now, I do see that bottom, but we are getting rises out of these two ratios. And I don't pay as much attention to the OEX put-call ratio. You'll see it a lot of times. It does not travel with the other two. It's used a lot for hedging, is my understanding. And so I probably could take that window off of here, but all information is interesting information to me. So we are seeing a low and we are starting to rise. So what that tells me is that we have very bullish investors and participants, but they're starting to get a little less bullish. So I would read this as we're still bearish for the market, but we're starting to move out of that toward neutral. But I would still say, looking at this chart, that I would still look for a little bit more downside here. All right. The American Association of Individual Investors. They do a survey that you can take on their website at aaii.org. And I think it's just one of those, like you're seeing on our StockCharts TV poll. Just click it and then you get to see what everybody's thinking. But we get the final number on Thursday evenings. And so what I noticed this time is we still are seeing, and I'm going to direct you down to the bull-bear ratio. Right now, the ratio is still very elevated, and it's telling us that obviously we have quite a few more bulls than we have bears. And I look for the extremes in this ratio, and we had almost hit an extreme where we had twice as many bulls versus bears. We're not there, we didn't get there, but we are still looking at an elevated ratio. So even though I'm seeing a slight decrease in bulls and a slight increase in bulls or bears, I'm still looking at this chart as bearish, because we're still looking at predominantly bullish participants to a point where we're getting these elevated bull-bear ratio readings. All right. The next one is the Name Exposure Index. This is the National Association of Active Investment Managers, and they report to us how exposed they are to the market. And then we check these readings, and it's a sentiment tracker because, again, your money managers, the more exposed they are, obviously the more bullish they are, right? They don't mind being that exposed to the market. And so we look for those numbers to be very high, or we look for them to be very low. Well, right now we've been on the high side. We did pull back. We had a really high reading last week, very high, that coincided with some of these others that we had seen. And again, typically these very extreme readings will generally arrive at a market turning point. And you can see over here we still had the rest of this parabolic to take to the upside. But even as we were on our way after that big reading, we had such a pullback on exposure. I think that should have been a clue right there that this was getting ready to end. So right now we still have a very elevated reading at just above 85. And you can see that although not as high, it's still elevated, and we are getting the downside move this week. I would expect to see, again, a little bit more downside because we are still elevated as far as exposure is concerned at about that 85 range. All right, let's look at the RIDEX analysis. And I'm going to show you a couple of indicator charts as well as a bonus. All right, this chart really was the big eye-opener for me today. And I'm going to make it nice and big for you. And that is because of this, the bear-bull ratio, our RIDEX ratio. So let me explain the chart very quickly. We follow a group of funds that used to be managed by RIDEX. It's like a closed basket that we look at. And every night, these funds report how many assets are in them. And so we can watch based on the money flows where money is going and where it's leaving. And based on that, we can determine whether market participants are more bullish or bearish. And so we calculate the ratio. It's the bear and money market assets, because think about that. That's on the not bullish side, would be in cash or in those bear funds, over the bull assets, all of the bull funds. Okay, so if you look at it this way, the more bullish people are, the lower and lower and lower the asset ratio will be, the RIDEX ratio. And that's exactly what we're seeing right now. This is an inverse scale. But we're now at a reading we haven't seen since, well, February. And that was right before the very large decline. I'm not saying we're getting ready to have a giant correction. I'm not saying that at all. But what I am saying is that we are looking at some very, very bullish, we have some highly bullish behavior going on when you're looking at the RIDEX asset ratio. And, I was watching for it to break out to the upside from this channel that we've been looking at. And boy, it did. And in a great large degree. It had not broken out yet last week when I did this sentiment report, but you can see since then, nice big breakout, and it's at a reading that we haven't seen since back in late January, beginning of February. So something to consider. And here's why. Look at how low the assets are in the bear funds right now and how low they are in the money market funds. If I go and annotate this and use a horizontal here, you can see when I put this, we're at lows, again, very extreme lows for this year on the assets in the bear funds. And down here, if I put it right here, you can see it's at a lowest reading we've seen all year long on the money market assets. So we're looking at some very, very bullish sentiment extremes. And then look at the move here on the total assets in the bull and sector funds. And while we're not at some of the highs that we've seen before, we're still high enough, and especially when you look at how little there is in the participation in the bear funds and how little money is sitting now in cash, that does tell you that market participants are out there. They're exposed. They're getting involved. They're feeling very bullish. And again, with sentiment being contrarian, that's something that we should be concerned about. That's usually when we look for the reversal. Well, we've already had a lot of downside, but I would suggest that based on this chart alone, that we should expect some more downside. And I don't like it. I don't like seeing things this extreme on my charts because generally it does lead to bad things. But you can come back to see some of these other tops we've had on these ratios and just get a feel for where they've come in before declines. And at this point, I just don't think that we're done when I look at this chart. I think there is more downside to go. All right, I wanted to show you the breadth chart that I do with the VIX on it. And let's bring that up right now. I looked at this one on Wednesday, and I'll usually bring it up during the market update if I know I'm not going to be showing it. And you can see the pullback that we've had since the end of September here. We've just been seeing the SPY slowly pulling back. We've now hit what could be some very good support, right here. But what I wanted to point out is, so with sentiment, we always talk about the VIX, and the higher the VIX reading, that means the more worried participants are, and the lower it is, the less worried they are. Well, I equate that to them feeling bullish and bearish. And right now we've got the VIX finally starting to penetrate one of the Bollinger Bands, and it is the lower one. And that is actually a positive. This chart, in contrast to the other one, it really shows you the difference in time frame. This is a very, very short-term chart. And look what's going on. I want to point out the fact that on breadth, we can see new highs, really not much in the way of deterioration at all during these last trading days to the downside. That was interesting to me. It's sort of like positive volume. I would expect volume, to decrease, positive volume to be more on a decrease when you've got a decline going like this. I don't expect to see new highs holding up like they are. And so to me, with that and the extreme right now on the VIX penetrating that lower Bollinger Band, honestly, I would say next week, I would be looking for a possible rebound over the first day or two, the first Monday, Tuesday, Wednesday. But looking at those other charts for the sentiment, I can't get on board for a great rally all the way through into next week. I just think that this is telling me that there's a lot of nervousness out there. And again, in the very short term, I use the VIX as sentiment, contrarian. So if people are very nervous, that usually tells me to look for a swing to the upside. Look at what's happened the last couple of times we've had penetrations of that lower Bollinger Band. The next day or two, we see some movement to the upside. It doesn't always last, but that's what I really wanted to point out to you today on this particular slide, is that we do have a VIX that's very overextended right now. And that tells me that over the next day or two, being Monday or Tuesday, to expect some upside movement. And like I said, the fact that I'm seeing these new highs not deteriorating at all, but only growing as prices are declining, that tells me that there is some internal strength hiding behind the sidelines there. And then I'm going to just show you really quickly my short-term indicators, because I think this also punctuates the sentiment charts that are bearish. Again, that last chart, yes, it's more of a day trader chart. So like I said, going into next week, we should probably expect some higher prices over the next day or two. But then look at this short-term chart. All of my indicators are still in decline. They're getting very close to oversold territory. So we can expect a turnaround soonish But I would say at this point we are still in decline, so I'm expecting more decline. You know, we've got that, like I said, sentiment is really extended to the bullish side. We need more of a pullback to get people a little more scared. And once they're a little more scared, then we should see the turnaround to the upside. But right now, all of my indicators, except for those short-term, those ultra short-term indicators are telling me that we still have more downside to digest. All right, so that concludes the sentiment report. Let's go ahead and look at the slides for the summary, I should say. And there we go. So let's, to summarize, I would say that all of my sentiment charts are very bearish right now as far as the market is concerned, because everybody is very, very bullish. There's a lot of bullish exuberance out there. However, that breadth and VIX chart does show me that we should expect a day or two of upside movement next week, just because we've got an extended VIX that's outside that lower Bollinger Band, and the new highs are still coming in, even though we're seeing a decline in the index price.
All right. Well, we got a lot on tap. Erin went over earlier in the show, coming up next week. So definitely be ready to check that out. I want to thank everybody for joining us today. Please remember to complete the survey as you exit. We do love to get your feedback. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.